more business boosting content, subscribe to our channel, hit the notification bell, and like our posts.
All right, a very big welcome to another edition of Webinar Wednesday, heading towards spring. But of course, that time of the year, big things are happening, and big things together with funding, SME funding, and that's the topic of the morning. Of course, funding is a major challenge, but doesn't necessarily have to be that way. But before I talk more about that, please let me know where you're from. Are you excited about this webinar? Of course, ProfitShare Partners is one of the most powerful alternative funders in the funding space for SMEs in South Africa. I don't want to spend too much time on that because my guest is going to talk more about that. But tell us where we are, a couple of house rules. Importantly, as we know by now, if we disappear, the important thing is we will be back. Technology sometimes fails us, but certainly I'll tell you, in Webinar Wednesday over the last number of years when it was launched on the second day of the pandemic, we're grateful there's been no interruption, but who knows what happens. But tell us where you are and tell us who's looking for funding. Importantly, tell us in the chat if you've got any questions on this journey this morning, put them onto the chat. And we do know, looking at history, that these chats work at high speed. So if we don't get to your questions, please, we will answer them in an email after the event. So, but please put them on there. Tell us where you're from. Northern Cape, good to see you. There again, Northern Cape, another one. Wow. Cape Town, another one. Great stuff. The Garden Route, Western Cape is dominating. Lovely to see all of you. But yeah, so this morning we're going to talk about funding, and I'm not going to spend too much time announcing it because I'd like my special guest to do that. But ProfitShare Partners, I've known Andrew Marin for many years. He's passionate about SME funding. They're making a massive difference in the funding space. And of course, he's going to talk more about that. And I've got a couple of questions. So if you don't mind me, I've just been given these questions. I've been given strict instructions to make sure I read these questions because they are important questions. But Andrew Marin, please join me on stage. Andrew, once again, good to see you. We had a nice chat offline earlier about our mutually passionate subject, funding. And Andrew Marin, you know, I know that I've known you for a number of years. I've seen your success. I've seen ProfitShare Partners, what you've done in the marketplace. You're a major player in helping many, and you've helped many, many SMEs throughout the nation. So we're grateful for that because, of course, we know that there's a massive funding gap, and we know that many SMEs need to learn more about funding readiness, but I'm not going to go too much into that because I know that's your job this morning. But Andrew, tell us more about this webinar, what you're going to do, and tell us more about yourself if you wouldn't mind.
Thank you, Mike, and thank you for the opportunity to come speak on this webinar. That's great. I'm hoping we can add some value to your listener base. It's always fun to get involved with NSBC, and we've seen our own growth. When we started out as a startup business, 8 years ago, and I think after about the second year, we won the NSBC National Business Chamber Champion for the year, I think. And since then, with the support and the backing, and I think you guys gave us a bit of a launch pad because since then we've distributed over 2 billion rand of funding to needy SMEs out there. We created close to 2,000 new jobs. We've sustained over 3,000 jobs. We've helped a number of SMEs that weren't bankable or traditionally bankable become larger players and bigger businesses, more sustainable. We even had one client who, last year raised 2.5 billion rand after initially not being able to raise any cash. So I think what you guys do is incredible, and it's a great platform for the funding side and the SME side to kind of come together with under a brand like NSBC, where you can actually guide and help people get to the next thing, demystify this whole financing thing. Why aren't I get funding? How can I get funding? So yeah, I think you guys are doing a great job in doing this.
Andrew, thank you for that. And over the years, we know that the funding space and the needs of funding. The reason why we exist is to foster the growth and sustainability of the SME sector with the ultimate aim of alleviating unemployment and job creation. And of course, funding plays a major role in that. And, we always talk to SMEs, we get hundreds of queries that, if you borrow money for the right reason, and borrowing money, there's nothing wrong with that. Funding your business for growth, for working capital, for equipment, or whatever it may be, is a critical role of the success journey. And our mission is always to say, hang on, just make sure you borrow for the right reason. And that's the important side, and know how to borrow. And that is why we're here this morning. So, Andrew, I've got a couple of questions I'd like to add to, but yeah, I think the key starting point is, and if you don't mind me to my attendees, I've got a couple of, I have to refer to, I don't like often looking down, but if you'll excuse me if I do, because I've been instructed, not requested, to do this. So, why do so many growing SMEs struggle to secure funding from traditional banks?
Yeah, so I think we need to understand what the bank's role is and how banks operate. And over the years, like over the last 30 or 40 years, banks have got more and more stricter in its lending. And it's for a whole host of reasons. You'll see regulation throughout the world around, you may have heard of things like Basel and so forth, that makes banking a lot stricter. And the reason for that is banks take in your and my money, when our income gets deposited into there, our debit orders go off an account. So it becomes a holding place for our wealth or our money, right? And so if banks are not responsible, because how they make money is they take the money from you while it's, whether it's your savings or, you've got a salary or you've got a payment on a deal, that couple of days that it lies in the bank, or the longer time that it lies in the bank, they take that money, they paying you, say, 4% on it, and they're lending it out at prime, right? So they make a margin on that. But through that, they've got to cover all their costs, their bad debts, and so forth. So the biggest cost for most funders is bad debts. And so the risk is, hey, I don't want to lend to somebody that I could potentially have a bad debt around. And so that's why banks have always, not always, but they've shied away from SMEs, anything new, anything that they don't understand or they can't manage that well, because it's a risk. They've got a responsibility at the end of the day, and they're governed under a whole host of rules. So it's not always that, we always like sometimes bank bash, for example, and say, these banks and so forth. But I think we've got to understand where they're coming from, and then if we understand what their rules are, understand what their mindset is, then we know, okay, we're wasting our time there. Let's look for something else, or let me try to meet the rules or the things that they need. Mm-hmm. So I think there's a couple of things. I mean, there's banks want longer financial history. They want predictable cash flows. They want you to have a strong balance sheet, sufficient security. And we know that growing SMEs and businesses have that total opposite profile, right? And that's what I'm sure many of the people on this call are like. Yes, that's great. I'm not 10 years old in business. I haven't got to that stage yet. I'm trying to get there, right? So how do I get there? If the banks does want to help me, how do I do that? So I think there's a mismatch between what banks offer and what SMEs need right now. And I think that's a role you're trying to play as well, is trying to bridge that gap. There's some very good businesses out there, some very good SMEs, but how do we make sure that good SME gets access to some funding, even if they don't meet the bank criteria and so forth? And I think that's what today's conversation will try to unpack. How can we do this?
Yeah, Andrew, you're 100% right. And, like you always say, and we say, to every SME out there, prepare to access funding now. Get that preparation going, because when you need it, it will be too late in many cases. So keep preparing, keep understanding. Andrew, what is the biggest mistake business owners make when applying for finance?
I think you just touched into the last part there. The biggest mistake is, and we see this very often, is that businesses leave it too late. They only want to apply for funding when they reach a cash flow crisis. So, when things are going well and things are going good, the guys are not using that time to apply for funding, putting the funding in place. We even say, when the guys are saying, I don't need any money, right? Even just with your normal bank, just apply for a 50,000 and overdraft or 100,000 and overdraft, and then slowly just increase it every year, whether or not you're using it, because that creates the history, and so forth. So when you do need it, you've got some kind of history. And then I used to always hear the saying and also use it. When you need the funds, the bank's not there, but when you have the funds, then the bank is there. And so they're willing to help you when you don't need it, and vice versa. So you've got to, like with anything, right? You've got to plan, and capital is one of the biggest things that we see, especially for growing businesses. Because great, you've got some capital right now, and maybe you're R1 million a year business, and that's great. But your thought is always about growing your business, right? And you always, how do I grow it? And then suddenly you do land this big order that takes you now from R1 million to 2 million rand, and suddenly you just don't have you don't have the working capital, you don't have the capacity to deal with it because you don't have the funds. And the problem is, then you start, what we see, businesses, they'll start using their own finances, they'll stretch their finances, they'll, borrow from here, they get into a bit of trouble, then the credit rating goes down. And then at the last minute, then they try to then come for funding. But now you've kind of almost like destroyed a bit of your credibility. You've got some, your financials don't look as good because you were trying to make other plans. And I mean, that's human nature, right? You're trying to make other plans, you're trying to sort it out. Don't worry, I can scrape a bit from here and a bit from there. But that's the biggest thing we see, that guys leave it for too late. And then secondly, they just don't present a clear commercial case. I think sometimes you just got to be, I know people are a bit worried that if they be a bit more honest with the funder, that the guys are not going to give them what they want. But I guess depending on the funder, you definitely do need to be a bit more transparent, because if we can understand the problem that you actually have, we can probably find either a better way to do it, or by understanding the problem, we can then mitigate the risk better and saying, okay, this is the way we can do it. Because if we find out in a different way that these are the problems we actually have, it kind of goes down to credibility. Well, if the guy is not telling me this now, when something really goes wrong, can I trust this person to with our funds? Are they going to tell us the true story? Are they going to work with us to solve the problem? And that's the biggest thing. I mean, it's one of the biggest things I look for is the integrity of a person. I'd say no to a good deal with somebody with bad integrity, and yes to a okay deal, but somebody with great integrity, because every business will go through some hardship at some stage. Is when you're in that, who do you want to be in the boat with when something's going wrong, right? If it's somebody who's got some kind of credibility and integrity, that they're going to try to do the best for the business and try to protect you. Whereas, somebody without credibility is just going to like, hey, that's your problem, and walk away from it. So I think those are the two main things. People leave it too late. Rather plan, put the facility in place or get funding early and don't use it, then get to a point where, you now suddenly need it right at the last minute. And that's the worst time to get it, because now you're not delivering to your client, or you're delaying on your deal, and because you're delaying on the deal, your order could be threatened, and you may just lose the order. So yeah, I think that's the biggest issue I see.
Yeah, 100%, Andrew. We say, not just funding, but anything else. If you have integrity, nothing else matters, and if you don't have integrity, nothing else matters. And it's a critical role. But also coming back to that transparency, completely transparent, irrespective of the consequences, and you'll be surprised how much positive feedback that you will get. Because if you're not transparent and you're giving false information, it's not a way the funder will catch you out. They probably will anyway, but it's just not the right thing to do and the way to get ahead. So yeah, thank you for that, Andrew. Now, importantly, can businesses obtain funding without owning significant assets? We get that question all the time.
Yeah, absolutely. I mean, so depending what you need. Remember, the assets, why a funder would want some kind of assets as security is to protect them for some kind of risk. So the certain types of funding, like asset-based financing, where you buy a car, bakkie, machinery for your business, whatever it is. I mean, that asset-based funding, you may not need that actual asset up front, but because you're buying it, right? So that's very separate. But there are other times where you just need an overdraft, or you need some kind of funding from funders like us or anybody else, and they say, well, do you have security? The security is usually because the funder has seen some kind of risk that they don't think they could manage. For example, you've got an order with, say, a large bank, and we know that the bank is undoubted for payment, right? So very likely that if you deliver, they will pay. So the risk is not there. So your funder is saying, okay, you've got a really good client. We know that if you deliver, you'll get paid. But the question is, if you're going to deliver, right? And so that's why banks and other funders want some kind of track record to see, have you done this before? Then you get other funders who will start a bit earlier and say, okay, even if you haven't done it before, there are certain risks, because if you don't manufacture this properly, they are not going to accept it. If you don't build a wall straight, they're not going to accept it. And then what happens? Because now you've used your capital to build this widget. Now you're going to restart. You've got to buy all new raw materials. You've got to build a new widget. And so what happens then? Where do you get this capital from? And so a funder would then have to put in more capital to rectify the order, but you're still getting paid the same amount, right? And so if you've got a low margin, then you've got a problem. So funders usually want to take an asset to protect them in case there's they see a problem that they can't really mitigate with anything else that you have. So that's the only time I think they really want assets, or should actually ask for assets. But there's tons of businesses, there's tons of other funders that we know, and I'm sure everybody know, that you can lend you just against your cash flow. They will just look at your bank statements. They'll say, hey, for the last 12 months, you've done this, we can give you X, Y, Z. So there's a whole host of funders. There's also like project finance. There's funders like us that you don't need any assets for, unless we see that kind of risk mitigant that we can't protect against. So it's not in all cases that you need significant assets to borrow, or any assets at all, actually. Mm-hmm. Cash flow is the most important thing, I think.
Yeah, it's interesting you say that, and that's coming out more often than not, cash flow funding. So, and I think, like you say, and we've got to broaden our minds, and it's not one fix all. So importantly, but also, coming to that, I often say as well, adopt the magic of tiny steps. Even if you have a 5,000 Rand overdraft, a small credit card for your business, get the process moving, get your credibility, get your credit rating high. And that's the process. The process should start now, irrespective if you need funding. And like Aaron, you touched on that. So start that process. Andrew, what should every SME have in place before approaching a funder?
So I think you need to find out who's the funder, right? So do some research on your funder. So just don't expect that every funder would want the same thing. So do research, right? So if you're funding to like a development finance agency, like say like an IDC or somebody like that, they would have very different kind of things that they need. Or a bank, they may want a whole host of information right up front before they even start the assessment process. So, and most funders would have their stuff on the website, or it's a very easy application process. It'll tell you what they need, right? So do some research and figure out what you need, because if you go to like a cash flow lender, they probably won't need a lot of information, because they can pull that off your bank statements and so forth, so they need very little. But you can't have take that same attitude towards, like, say, a developmental financier, because they're going to be, we need a whole host of other things. So I think do the background and the history. The main things, obviously, just like your company documents, reg documents, your directors, documents like proof of address, all the normal FICA stuff. Every single funder will want your FICA, proof of address, ID, and so forth. Up to date bank statements. Just have that on hand. Some people want 3, 6, 12 months. So if you have that, that's great. If you're going to banks and more traditional funders, they'll want 1 or 2 years of annual financial statements, recent management accounts. So if you start getting all of this ready while you know you want to get apply for financing, it just makes your process so much easier, because then the more information you can give the funder up front, or when they ask for it is ready, it also makes the process go faster. And then I think also businesses need to be a bit more realistic when it comes to I see a lot of clients who will give us a cash flow for what we want to see, and not being realistic about it, because we'll be realistic and say, well, hold on a second, you're only going to deliver this. It's going to take you 14 days to manufacture, and you're going to deliver this in. You're only going to invoice on this date, but you're asking me upfront for funding for 30 days, whereas you're only going to get paid 30 days after you deliver the goods and signed off. So that means you're actually funding for 60 days. And so I think a lot of the times the guys don't. Everybody's trying to post a very positive picture because you think it's the right thing that people want to see, I think you should show and say, actually, I'm going to run short of money this month and next month, but in month 3, I will get my funding. I mean, when the funding comes right, then I'll be okay. So I think it's important that even if you're, especially as a small business, I know a lot of people rely on somebody else to do the financial projection, but you need to understand that financial projection and say, hey, is that correct? I mean, put your hand on your heart and say, is that correct? Because the last thing is, even if the funder is not checking that, and you think you only need it for 30 days, you then get into a problem because in 30 days' time when you need to pay, you can't because you needed it for 60 days. And then they're going to say, well, now you're defaulting, right? So rather upfront, paint out the worst possible scenario, plan for the 60 or the 90 days. And then if you deliver earlier, great. Because upfront, if you ask somebody for 90 days, they'll give you 90 days. If you ask for 30, they'll give you 30. But don't ask for 30 when you actually need 90, because then now it seems that you're in default. So I think, when you are approaching a funder, just have all these realistic, the actual position in place. Get your, like if you've got documents, supplier documents, quotes, contracts that you need, all of that, just have that ready because the funder is going to need that at some stage.
No, Andrew, 100%. And like we touched on, maybe not part of this question, but the previous one, is the best time to get funding ready is when you don't need funding. So it's a great exercise to do because the point, as we always make, is that if you prepare yourself for funding, you're building your foundation to build your castle of your business. So it's not just about the funding, it's doing the right thing, preparing well, building your foundation, your business foundation to build your own castle. And at the same time, you are funding ready. So it's an important exercise for every business owner, whether you're a seasoned or a startup. It's a good process, it's a good exercise, and it's a good habit to get into, of course. Andrew, why is working capital so critical, and how can businesses avoid cash flow challenges while growing?
So with every business you want to grow, right? But growth requires cash, and depending the kind of business that you're in, and I always tell this to clients, you need to figure out who's the cash that you have, how much of risk you're willing to take, and who are the kind of clients that you want. So if we always see people saying, hey, I want to sell my stuff to ShopRite, and I want to sell my stuff to Coca-Cola. And that's great because they can give you great growth in your business, but you've also got to realize that those retailers or those bigger businesses, and I'm not singling out anyone, I'm just saying this is the reality, that you may have 120-day payment terms in some cases. And so I got to buy my goods now, manufacture it, and deliver it. And then I can only invoice in, say, 45 days time. And then in some businesses, you've got 120 days after you delivered that invoice before you get paid. And these are some of the largest corporates operating in the country at the moment. So you've got to understand the cycles, the kind of companies that you're going to work with, and what are their payment cycles, and can you afford that time frame? Because now you need, if you're delivering, say, 500,000 rand worth of goods this month, great. You need say 6 months of 6 months of funding, but your business is growing, right? And next month you also want to deliver, so you need another 500,000 next month, and for another 500 the month after that. So you need it for about 6 months before you get your first payment in. So you don't need 500,000 in total; you need 3 million rand in total. And so I think when businesses plan, and that's how they get into cash flow trouble, is growing businesses. So businesses are doing so well; their sales are great, they're selling, they're doing really well, but I don't think they have a grip or understand the cash flow cycle that they're in, and that's when they get cash flow issues. So I think being honest with yourself about doing that forecast, and I know the forecast is not for the accountants and not for the finance side; it's for you as the business owner. If you can get an understanding of your cash and your cash flow, and then price that accordingly. So don't go to a funder. And we see this all the time, right? Let me just sort out this month because I'll make a plan for next month, and then you're stuck with a funder that maybe you use an expensive funder, and now your finance is over 6 months, and 6 months of interest or whatever fees they charge or whatever it is actually erodes your margin. and then you just don't have enough cash for other things that you need. When you plan, everybody plans, I'm going to sell 3 million rand worth of goods and I'm going to make 500,000 rand profit. And the next month I'm going to sell 3 million rand worth of goods and make another 500,000 rand profit. So you show it every month. You're not showing it that, hey, it's actually only in 3 months' time that I'm actually getting the first cash in. And so I think it's that it sounds silly, but it's the little basic thing that businesses, I see them, either they forget or they just don't plan for this in time. And then remember, growth takes capital. And if you don't, as we talked about it before, if you don't plan early enough, you can't grow without that capital. And then, or you get into trouble. So you may have heard the terms like over trading. You wonder why these guys are growing so fast and yet they go out of business, or they go into business rescue. It's all cash flow planning because they just don't have the right cash flow at the right time. So sometimes you may just have to restrain your growth to ensure that you can, that your cash flow can manage or can keep up with what you need.
Well, I've got the chat's going at speed there. I can pick up a question there. Someone's asking there, I can't quite get the name, but can a startup business get funding if they don't have 6 months or 12 months bank statements?
It is more difficult, but there's definitely players that do that. And it depends what you have, right? So I'll just give you an example, like us, like ProfitShare Partners, if you have a purchase order or a contract with a credible company, we can fund it. So we can fund it, your very first order, you've got no financials and no security and the like, we can fund that, but it has to be against an order. But if you came to us and say, I'm a brand new startup, I don't have any contracts in place, I want to manufacture these widgets or make these widgets, and then I'm going to sell them, then we wouldn't. That's not something we would fund, and I don't think anybody else could fund either. But then it could be, maybe it's like a developmental loan that you need, or you need an angel investor or something, or you actually need an investor, So it's those kind of things that you need to look at. I know a lot of the businesses that we've worked with, until they got to that stage where they got their first orders, we saw people taking out, personal loans. If they had assets like a property, sometimes it's taking a mortgage against that, starting with that first, and then once they got the rhythm, come to various players or various funders. But it definitely is possible, just depending what you're trying to finance.
Yeah, and you're 100% right, and we haven't seen it. It's, from our side, it appears to be very unlikely if you don't have at least 6 months bank statements. But as Andrew said, it's not impossible, but I think the big thing there is a good bit of advice is build it up as focus number one. Get those 6 months at least, and try and scale in a small way, but get those 6 months, get that credibility going, and then of course take action on that funding. But yeah, it's not impossible. If you need assistance there, drop us a line and we can see what we can do. We'll ask Andrew and his team if he can help us there. Andrew, what funding options are available for businesses that don't qualify for bank finance?
So I guess it's depending what type of business you're in, right? So there's a whole lot of like grant. There's grants available from various sources. There are, I'm trying to think, it is limited, right? But I guess you got to figure out what business that you're in. I'm just looking at one of the questions here, which says, I want to buy equipment to run a business, but don't have any orders. So, and we see this a lot where guys want the finance first to buy something without actually having like orders or a business in place yet. So I think if you can go get the orders first, I think that's the most important part. You need the sales first. There are not many businesses that you can start. I guess if it's like, say, I'm just trying to think off the top of it. Let's say a car wash, for example. You've got to have the car wash there before people will actually start to use it, right? But it could be other businesses where, I want to do I don't know, I need to manufacture some protective clothing wear, and I need machines, sewing machines to do this. So the first thing would be, I need to go get some orders. Let me go get some orders. Let me go take my, the ideas that I have, go to a client and say, okay, these are the things that I can make, and these are my prices, and this is what I can do. but you got to give me, you got to give me some time. I can deliver in, XYZ months. And then once you've got those orders, then go and approach, it's going to be harder with banks, but, maybe developmental financiers. Maybe if it's a big company that's giving you the order, you can approach us because we can give it to you up front, or an investor. Because if you go to an investor, or, they always say, like, friends, family, whatever it is, or a bank on a personal loan, and show them and say, listen, I need this 300 grand to buy these sewing machines, for example, and here are my orders. It's much more credible, because you've got some kind of plan of how you're going to, whatever your service is, there is a demand for it. There are people wanting to buy your service, but you just need the money to go and buy the material and the sewing machines, for example. Versus coming to us and saying, or anybody, and saying, I want to create this business. I need money for the sewing machines and the material. Okay, and who's going to buy it? I'm not sure. So the sales risk is big. So if nobody's going to buy, if there's no interest in your goods, you now manufacture these goods and there's no sales, how do you get the money back to repay the debt? And it's not just selling to one person. If you've got, say, you want to buy a machine you want to pay it off over a year or 2 years or 3 years, you need 3 years worth of buyers to, it's not just a once-off. How do you pay for month 2 and month 3 and month 4? So it is more difficult, and but once you can prove that you've got clients, you can set up a decent business, not a plan, but a business that has some kind of demand, then I think it'll be easier. It's not easy, but it will be easier to raise funding than just trying to get capital with nothing in place yet.
Well, Henry, here's an important one. And how quickly can an SME typically access funding once it's approved?
So I know, like the cash flow lenders out there that would look at your bank statements, and they'll say, well, based on your history over the last couple of months, you got 6 months of history. They can probably give you money in like 2 or 3 days. The first time around, the second time, and that's probably because they're just waiting for information from you. People like us would be usually, we say, within 7 days from application to payout. Can be quicker, but it's just usually because we're waiting for information from a client. So it could be really quick, but then you've got funders like, let's say, developmental funders or banks. Well, let's say the developmental funders, for example, where you're looking for, you're trying to put a whole new factory up or something. I mean, that could take months. That could take 3 months or 4 months. I've even seen applications that have taken up to a year. So depending on the type of business you've got, you've got to expect, and you've got to expect all of these kind of things, and plan for these kind of timeframes, depending on the type of product you need.
Yeah. So, Andrew, what are you seeing in the SME funding market today, and what advice would you give businesses seeking funding for the very first time?
So I would say what's nice, I mean, when we started about 8 years ago, there weren't as many options as there is today. So and we're seeing like the banks, the new entrants. So there's a lot of new funders coming to the market. The banks are being a bit more, looking at this, the SME space. And I think in a country like ours, where unemployment is rife, people understand that SMEs are the biggest growth for employment and the biggest growth for economic growth. So there's a lot of attention being paid to how do we help more and more SMEs, and we get called a lot by a lot of different players, by institutions, by banks, and so forth. How do can we collaborate? How do we do this? Or can we do that together? Or can you help us with this? So we do see that landscape changing a lot, whereas 8 years ago or 10 years ago, it was just SMEs are high risk. We don't want to touch that, So I think we, just always continue the research and keep abreast of things. Even from 3 years ago to now, SMEs have a lot more options than they had previously. Sorry, Mike, the second part of your question, I don't think I slipped my mind.
Yeah, what are you seeing in the SME funding market today, and what advice would you give businesses seeking funding for the very first time?
Okay, and so I think, oh yeah, and if you're seeking funding for the first time, I think you need to have some kind of plan, right? So, as I said before as well, you need to be transparent, obviously, with yourself as well, and what are the risks. And remember, you play devil's advocate. So if you're planning funding for the first time, why would, if it was your money, why would you give somebody with your plan the funds, right? So somebody's saying, I want to start up XYZ business. Think about if it was your money, what are the questions that you would ask to protect so your first thing is, how do I protect my capital? How do I know that this person is actually going to give me back the capital that I've lent, right? And secondly, if I keep that money in the bank, I'm going to get 5% interest. I know my capital is safe, and I'm going to get whatever the 5% interest a year is. May not be big, but my money is safe, and I'm getting another $5,000 a year on top of it. Now you're going to convince them to say, well, I want you to take some risk. I want you to give me the money, the 100,000. Your capital is now fully at risk, and I'm going to give you a certain rate of return to say, take the risk with me. Because guys, well, it's $5,000 in the bank. With you, maybe I'm making 20,000 a year. So I'm willing to take the risk for the risk and reward kind of return. So so one part is the economics. Like, okay, will this person, so a funder is not going to come and give you the money for free, or to just give it to you at, say, prime, if it's a brand new thing, because they're taking a lot of risk with you. And be honest and say, how do I know that this business is going to survive, right? So you got to do. I think if you can do that inner test, even go online and test. There's so many. Especially with AI now, you can even ask the questions itself, like, what are the things I've got to worry about? How do I mitigate this risk? What are the risks in this business? No matter what business it is, I promise you, with AI now and the internet and information that it can research behind the scenes, it can give you all of the risk factors in your own business. The great thing is the thing that we see with new entrants, unless they have an order, is that the guys don't understand what the risks are in their business. And remember, a funder, the banks probably have hundreds of years of information. Funders like us maybe have 10 years of information, but we've seen thousands of applications. And remember, every funder has lost, every funder loses millions of rands every year in bad debts. So their risk mitigants are based on, hey, I've seen this movie before. I've lent to another company also doing something similar, and these were the risks that they went through, and that's how we lost our money. And so when they ask you certain questions around, have you, if they see that you haven't addressed that, they'll say, well, hold on a second, you could lose your money if you don't take out, say, goods in transit insurance, for example. Your vehicle is hijacked with your goods in it, or has an accident. You lose all of your capital because it was on the back of this truck, and you don't have the goods in transit insurance. Your business is toast, right? And so, I mean, it's a silly thing, but it'll be things like that. So you got to make sure that you have that in place. So if you say, no, don't worry, I don't need that. Why do I need the insurance in place? Because I'm a very safe driver, and I'm going to deliver it myself, and don't worry about those kind of things. A funder could actually say, okay, I'm not interested, I'm not willing to fund the business, because they can see that you're not mitigating certain risks that they know is there. So the funders have seen, no matter how unique your business is, there's a lot of aspects in it that has been replayed in other clients and other applications, in other deals that we've done, and we've had bad experiences in, right? So it's all of the kind of credit questions and the risk mitigants that funders try to put in place is because they're trying to protect from a bad debt situation that they've probably gone through before. And that's why you'll see some of them won't even finance certain things. Like, we've tried in this, and we've tried to mitigate our risk. We've taken security, but we've still got too badly burnt in, say, the construction sector. So that's why we just don't fund construction anymore, And so no matter how great your construction plan is, they're like, listen, we just not interested. So it's not always about your side as well. It's, you could have a great business. It's just going to a funder that just doesn't have the appetite for that kind of thing, experience too many bad debts in that kind of space. They don't have the right mitigants for that kind of thing. Yeah, so I think you just got to realize all of these kind of things, especially when you're applying for the first time. And then, yeah, be realistic, and ask yourself the hard questions before you go to the funder.
Yeah, a good way to put that, Andrew. Yeah, we need to start learning to get AI up there. Call him our brainstorming partner to assist us. But Andy, I just want to touch on an important subject which is becoming more every day, as we all know, AI and business growth. A couple of minutes. AI is transforming business. How can SMEs use AI today to grow faster without significantly increasing costs or headcount?
Okay, so I think the biggest gift that we've received for SMEs is AI. I mean, the amount of data, the information, the help that AI and all these tools that it brings now I think it's a godsend for SMEs. So we should look at it as as an enabling partner. We shouldn't be scared of it at all. What it has done, it has kind of leveled the playing fields. So before, a small, I mean, I do this all the time as well because I'm always coming up with ideas, and I will go online and I'll go research it using an AI tool, right? And I know a lot of people play with ChatGPT and those kind of things. I would say invest that $20. I think, I'm not sure if that's the amount, or $20 or $5, whatever the number is, to get a deeper, like not the pro version, but a better version, because you can get a lot of cursory information, but you can get AI tools to help you do certain things. Like, so if you want to start up a business, for example, you can go into AI and say, I want to start up something. I mean, I heard of some when I was traveling. I saw this really cool product, and I thought, wow, that's amazing. This, and isn't in South Africa. How do I get this thing started? And I knew nothing about it. By the end of the weekend, I had a bank-ready funding plan available. I had a really good understanding of the business. I understood its chemical and molecular structure, which I'm no chemist or scientist or anything of the sort, and I had a really good understanding of it. And then I realized what are the pitfalls in South Africa to have that done. And one was, okay, I couldn't get this kind of raw material, enough of this raw material to make it viable. And if I did want to do that, then I had to import goods and so forth. So you can test your ideas. So SMEs, you can test your ideas using these AI tools, and there are tons out there. If you're new to it, you're not sure what to do, my go-to sometimes just go to YouTube, and like, how do I start? If you're also not sure on AI, ask the AI tool itself. How do I do this? How do I, they always people say, you got to have a really good prompt. That's, yes, you'll get a better result, but everybody starts somewhere, right? And once you get onto this, you realize, how did I do without it? So the next part of it is, when you're growing a business, the first part is, many people start alone. Then I need somebody else to help me, and it's usually where SMEs get tripped up is usually on the finance side, because it's not that you're not good at manufacturing something or buying and selling something, is that you're just not so good to get your finances in order, and I'm running back behind my back and so forth. You can actually get a tool that will automate your invoices for you. So when you leave a meeting, because I know SMEs, we're always hustling, we're spending most of the day on the road trying to get new clients and do things. We don't have time for the admin. And if you're a new business, I don't have money to hire somebody for the admin just yet. But you can set these things up so easily that while you're chatting to your client, you can actually have the invoice done. So when you leave that meeting, the invoice is already prepared for you and sent off to your client without you having to spend any amount of time on it. You can automate your emails, that it'll learn how you speak on an email and automate. Be careful on that, because I guess you gotta try it out first and make sure it works. So when a customer, while you're on the road, sends you an email and wants a cost on something, you can automate these things, that it automatically responds as if it's you, sends the information off, and wow, that person's thinking, shit, this person responds quickly and stuff. You didn't wait for that night to come back, then do all your calculations at night if you're free, and then send it out the next day. Whereas sometimes in sales, the quicker you answer and respond, the better, the more better chance that you got of doing sales. So there's so many tools. I mean, you can even use it to look at the things in your life that is taking time, especially repetitive stuff. So if you've got like every day I get these orders in, and then I've got to go through, take these orders off this spreadsheet, and I've got to put it into this program or into this template. So then I can work out all these costs, and then I'm going to take it from there and put it onto an invoice. You set it up once, you can automate it, and anybody, even if you don't have a great tech experience or development experience, I promise you I can teach my mom to do this. And so this thing will do those repetitive tasks for you every single day without you even touching it. And so now you don't have to hire that extra person. It'll take you a bit more time to hire for the repetitive stuff. You don't have to hire somebody. The AI stuff can do it for you and make you a lot more efficient, make you work faster, and anybody can do this. So I'm saying it's one of the greatest gifts that we received is these AI tools, and there's so much of stuff out there. Just watch some videos, get into this thing, and you'll see, and actually start using it. Just trying it. I just think it's the greatest gift.
It is, Andrew. I tell you what, it has. It levels the playing field, and you're 100% with that. And especially for a business owner, owning and operating an SME, it's amazing stuff. And one must spend at least, I remember many years ago when the computers came up, and the people who never, embraced the computer lost forever. And it's the same with AI. If you're going to not embrace it now and use it to your advantage, you will be lost. So please use that. I've got one final question for Andrew, but then don't leave us, because I've got 3 powerful announcements to make, short announcements to make before closing off. But my final one to you is based again on AI, and it's quite relevant for this morning's discussion, Andrew. Can AI help businesses prepare stronger funding applications, improve cash flow forecasting, and become more attractive to funders?
100%. And if you're using AI tools to do it, obviously we can always see when it happens, but I'd rather people use the AI tools because you give a much more professional response or document back to your funder. AI tools will help you think about things that you've never thought about. So all you got to do is go into, like say, chat or one of these tools and say, I am I'm just trying to think. I think there was somebody there who said, I've got a law firm and looking for some funding. I'm a law firm. I have 5 associates and 3 partners. We bill XYZ every month. These are my I get regular clients at this space. I need to raise R1 million worth of funding. Help me put a business plan together or a cash flow to approach a funder. And you'll be amazed at what it does. Obviously, we've got the paid plans. It does something so much better. And this is for any business. And then from there, you can start augmenting it. So it'll give you something that it's a bit off here, it's a bit off there. So you tell it to go back, okay, this is not, it shouldn't be 50,000 Rand a month. It should be 75,000. And actually, I don't need 3 people, I need 2 people. So you can start playing with that. And the best thing about that is because while you're playing with it, you start to understand your business better. And then ask it questions like, okay, so what happens if my customer pays me 30 days late? If the supplier cost increases by 5% in the next quarter, if the exchange rate goes up, I mean, you can even build a calculator to say every single day, go and get me the live Rand dollar exchange rate and update my spreadsheet with it. Right? I mean, you don't even have to figure out how it does it. You just tell it to do it and it'll do it. So now you've got your business plan or your cash flow forecasting and model looks a hell of a lot better. You're taking into things that you probably wouldn't have thought of, because remember what AI does, it amalgamates information across hundreds of thousands or millions of documents it has seen, and it's giving you almost like a solidified, integrated view and the best learnings that it's got from millions of documents. Right? So it's giving you great information, And then you should also then say, I'm going to a cash flow funder, I'm going to a developmental funder, I'm going to a purchase order funder. And it'll also pick up like what do you actually need, and what are the documents you need, what do you need to show them. And so 100%, I think you must be using it, and test it. Let it become your soundboard. Obviously, if you know about your business, because if you don't know about something, AI can get things wrong. It's getting better and better every day. I mean, just from 6 months ago to now, it's just stupid mistakes it make back then, and now it's like chalk and cheese. It's getting so much better. But you obviously need to know about your business. So if it throws out something silly, you will figure out, hey, that's not quite how it works. But when you correct it, it'll learn. Yeah. So absolutely, I think you'll make a much stronger argument using AI for your funding applications. It'll make you see the issues that you're not looking at, and then it'll put in things that you haven't thought about. That it'll show the funder that, hey, these guys have actually thought about these things. Yeah. So I would say use it. It's a great tool. Yeah.
Yeah, Andrew, 100%. You said this earlier as well, and just to add to that comment of AI, importantly, invest a few $100 a month, because what it does, if you subscribe to it, it gets to know your profile, it gets to know all your information, it gets to understand your business. If you use it ad hoc, it won't. That's critically important. It's a few $100, like Andrew says. On the other side, whatever is produced by AI, as long as it's factual, it's personal to you, it's factual to you, it's truthful, it's to you and your business. That's critically important. So, but as Andrew says, use it, it's life-changing, and spend 20 minutes a day understanding it and learning it and utilizing it in whatever you do. It's amazing what it can do. So before we close, I've got 3 announcements to make. Leanne, my team at the back there. But while we do that, please put up ProfitShare Partners' contact details. So of course we can, all our attendees can be in touch with the team, if you wouldn't mind, Alicia. And then the first one here, Andrew, I'm going to ask you here. This is an incredibly amazing. This is exclusive to NSBC members. Andrew, you tell it better than I do, so please tell us about this.
So we've set aside 3 million rand that we're going to help at least 6 businesses with, to give away but we're going to put 500,000 facilities in place for your members. And so against that, they will have 0 cost in it. So we're not going to charge them any profit share, any fees. There's no interest on it. Obviously, they need to qualify in terms of, it must be something that we're able to do as we would normally do. And then they pay on the 500,000 rand of it. So if say they take $1 million from us, the first 500,000 will have 0 cost. So over the next few months, every month we want to pick one of these clients that we will be lucky and get 500,000 rand at no cost. It's not a grant; it's obviously payable back. So, but it's just to help the guys get going.
Yeah. So as Andrew says, it's NSBC members. Of course, you've got to qualify like normal, interest free for that first 500. And of course, no cost. So it's certainly worth applying for. If you're ready to access funding, now's the time to do it. So Andrew, I'm really happy, and thank you for allowing the NSBC to work with you on this amazing initiative. And if you need any more information after this, but there is ProfitShare's, there's Stephanie's ProfitShare Partners' email address, pop her an email, or go onto their site and jump on board. It's amazing. If you need that money now's the time to do it. And of course, their team will help you. Let's pop on to the next announcement, Leanne, if you would. Here it is, coming up soon, and I know, importantly, ProfitShare Partners will be there. The Business Show Africa, if you haven't registered, pre-registration is free. We're on for a record turnout, and apparently we believe it's a world record of attendees, heading about 33,500 business owners, entrepreneurs, decision makers from all over South Africa, coming there for master classes, networking. Come and meet Andrew, their team there, ProfitShare Partners, talk to them about funding and all the other exhibits as well. It's an amazing experience, and many people have said, what you get there in 2 days, you'll never get in 10 years. So please join us. If you haven't registered, now's the time. And in fact, it's exactly 4 weeks today. All right, next one, Leanne. And of course, at the event, the Business Show Africa will be hosting Access to Finance Live. It's the expo element of the business show, where, of course, ProfitShare Partners will be You will see them flagged coming in with their to finance billboard, pop-ups, etc. So come there, talk to them about funding readiness, accessing funding. It's a nice element to the show, and of course there are lots of master classes throughout there. So please register and join us. And here again, thank you once again, Andrew. Of course, the founder and CEO of ProfitShare Partners. It's been an absolute privilege, like all the times before. You play a major role, and thank you for what you do for SME South Africa. We're truly grateful that you partner with the NSBC and have so for such a long time. And I know this is the first, well, it's not the first, but I know there are many more to come. And to all our attendees out there, without you guys, we can't do what we do. So we're grateful for your attendance. Stay close to us. We'll see you at the business show. And again, thank you for being part of Webinar Wednesday. All the very best. Thank you, Andrew.
Great, thank you. I just want to say to everyone, this is one of the shows we never miss every year. I've never seen such a great turnout of SMEs. So we're really serious about small business or business in general, and you want to grow. That's one of the best places to go. And it's not just us; it's a number of other funders there. But there's a whole lot of other support companies and other networks that you can create there. I've seen so many businesses who have done business at the NSBC show. So make sure that you're there, because I think it's a fantastic support vehicle for small businesses. And Mike, I'd love to thank you and your team for really, there's not many organizations that do this, and lots of people talk about helping small businesses, and I see you guys you guys really walk the walk and talk the talk, and you really bring everybody together to help. So I encourage guys to attend and just make the best of it.
Thank you.
I look forward to seeing you there. So I'll be there. So if
we'll see you there, Andrew. We'll talk about funding. All the best, eh? Thank you, everybody.
Keep up. Thanks, Mike. Thanks, everyone. Bye.
Come on.
For more business boosting content, subscribe to our channel, hit the notification bell, and like our posts.